Si, si. I mean, we. Hey, good morning. How you doing, huh? I got some bad news for you. My flight was changed, and I'm not going to be able to make tomorrow's webinar. I have to get on a flight early, and then I'll be on my way to the other side of the planet. Well, halfway through the book, huh? Right on, Fred. I'm glad you're enjoying it. So anyway, yeah, but I'll be able to do the Friday webinar. So Thursday I won't. So Wednesday and Thursday, that's how long it's going to take me to get there. I won't be able to make Wednesday or Thursday. I can do Friday and Monday, and I'm not sure about Tuesday. So yeah, all that kind of stuff. But at least the markets have been good. More pips, huh? Just loving it. So let's clear off our desk and get ready. It is the 12th of April, a Tuesday. Let's get our pippin' on. Correct, Artem. 24 hours from now, I'll be on a plane. 24 hours after that, I'll be getting off of the plane. Nice. Oh, lucky me. So anyways, good morning, good day, good afternoon, whatever the case may be. Welcome to Forex.Today for another lovely Forex trading strategy session. First of all, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, however, it's not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Please go to TradersWay.com and give us a try. Open up a demo. Takes less than a minute. Everything will be easy peasy, and I think you will be surprised and say, wow, these guys seem to be pretty good. If you contact our technical support or sales staff or whoever, you're going to be pleasantly surprised. When you pull the trigger, we will execute your trades quickly with low spreads, and you'll say, I'm pleasantly surprised. And that's going to be the tone of the rest of your life. Pleasantly surprised. And we want to be your Forex trading partner for many years to come. We want to be your prime broker, eh? We do these sessions every day, 7:30 in the morning here at Forex.Today, and every Friday at FX Street, where I am Forex Speaker of the Year. There are no other Forex Speakers of the Year, by the way, only one. So that's pretty good. Lovely. Thank you very much. Let's review what's happened overnight. Japanese bank lending, year over year, 2%. Little disappointing, eh? Lowest since 2013. Wait. I thought their economy is supposed to be expanding. I thought they're printing trillions and trillions of dollars of yen, which is what Google's of yen. I thought their economy was supposed to be expanding. Why is this contracting? Huh? No so good, huh? Business confidence in Australia, 9-month high. Ripper. Conditions, 8-year high. Lovely, right? Alcoa started the earnings season yesterday. Yay! Oh, but not with good numbers. But it's a commodity play, and they're telling you what happened. And commodities are down. They're primarily they're considered an aluminum company. I know they do other things, but they're an aluminum company. One of the things they did do is say they cut their forecast for aluminum or aluminium demand. Okay. Okay, negative interest rate policy at the Bank of Japan continued to backfire. The latest Japan, boy, it's poor English. Japanese bank lending growth falling to 2.5-year lows. Yeah, so that's just something that was reported out of one of the news sources. So, anyways, it just reiterates the first one. So that's not good when you're spending money and you're not getting what you expected, right? Well, so are you an inquisitive investor, guys? Are you paid to know things that other people don't know? Or would you like to be that person that gets paid to know things that other people don't know? Why don't you look into aluminum? Educate yourself on aluminum. And I have another one for you, by the way. But just think of it, when is aluminum in higher demand? When should demand be growing? Well, it might have to do with global macroeconomics. So why don't you roll up your sleeves and find out more about what Elko has said, and then look into it. Who tracks aluminum and this, that, and the other thing? Educate yourself, right? Wouldn't kill you, would it? And then if I skip ahead, later today there's the Chilean central bank interest rate decision. Okay, what are they going to say about the world and interest rates for them? But they may tell you about global macroeconomics. And when you think Chile, what do you think of? Not aluminum, not plastic Barbie dolls, copper. Copper. Okay, so why don't you look into that? What's going on in Chile? What's going on with copper production? What's going on with copper demand? Who's pulling it out of the ground? What do they think about the future? What does that mean for macroeconomics? So let's say major producers of copper in Chile say, this year's not going to be good, but we see 2018 as being good for whatever reason, for X, Y, and Z reason. Well, what would that mean for commodity prices, commodity currencies, demand growth, macroeconomics? What does that mean for China? What does that mean for Australia? What does that mean for Canada? What does that mean for the US dollar and its economy? What's going on? Where is Europe in its cycle? It could all be here in copper, guys. Or it could be in aluminum. Or maybe it's just in the knowledge of both what's going to happen in the next few years in copper and aluminum. Right? It's just, this is where you're like, boom, I got to get out of amateur mode. Right? And you're like, that's what I want to know. Good, roll up your sleeves and get her done. Yeah? Am I right? Remember, it's all about tracking the money. Yeah. It's all about tracking the money. Where's the money going to be in 2 years? Get there first. Okay. All right. So out of the UK, lots of news. Better than expected CPI. Wink, wink, nudge, nudge. 15-month high. 15-month high, right? Wink, wink, nudge, nudge. We've been talking about an improvement in the UK inflation data. Wink, wink, nudge, nudge, right? James, do your research. That's a great question to ask. Does gold correlate with other metals? Good. Go find out. Okay, that's how you become an expert. When you tell your clients, you're like, "Well, I did this research, and these are my findings." Not like, "Oh, well, this guy, this webinar I go to, he mentioned something, blah blah blah." Good to know. Become an expert, and then share with the group. So, anyways, wink, wink, nudge, nudge. Surprisingly good CPI data for the UK in the first report of the second quarter. What a coincidence. What else going on? PPI. Look at that, year over year, negative 6.5. So we're not getting the PPI side yet, are we? 0.2 core, which means in this case you take out falling oil prices. But remember, oil prices are not falling anymore. They're rising. So what are the future PPI reports going to say? Well, so James, going back to his thing about gold and maybe copper and all this kind of stuff. So you see copper down. Okay. Well, whatever. Look, we don't care what happened today or yesterday or the day before that or last week or last month or last year. All of that is completely irrelevant. Why? It's already been priced in. Everyone's already made their money and gone home. So like I said before, where's the money going to be in 2 years? And move into that neighborhood now. Right? So it's better to say, well, here's my 12 and 24 and 36 month outlook for copper. And here are my 3 suggestions on how to play copper. Boom, boom, boom. That's it. Right? Just bullet point it. If you can bullet point it, you're on your way to filthy, stinking rich. That's hot. That's hot. Yeah. So anyways, become an expert, right? Get her done. The world needs a hero. Might as well be you, right, James? So what else going on today? Woo, Baltic Dry Index today. Woo, market mover, not. But at least it's not down to 0 anymore, right? We got import prices, weekly red book sales. Okay, none of that's important. IMF updates its world economic outlook. I wonder if we should read that. Okay, now this was part of our forecast for the UK, right? Wasn't this what we were talking about 9 months ago? At the beginning of the second quarter, we'll get surprisingly good inflation data. The first one's CPI, but we want like GDP and all that kind of stuff too. But we talked about this 9 months ago that in the second quarter of 2016, we will get surprisingly good inflation data out of the UK. This should be backed up by the IMF. Then we'll start to see GDP numbers, which will shock the world. But the numbers will go up partially because of improving, commodity prices and stuff, right? And have you seen the 2-day rally in the Great British Pound? Huh. Well, that's funny. So anyways, the WEO part was a big deal because we need the IMF to back it up. Okay, and there's some IMF and World Bank meetings this weekend as well. I had to decline because I'm in China, but that's happening in Washington D.C. So I don't know. They're going to maybe talk some things up. Who knows? Rodney, you cut the double bottom with the higher high and bought the higher low? Yeah, easy peasy, eh? Good job. Well, let's play the happy music and then go to the charts. That's how it's supposed to be, isn't it, Rodney? All right. Thank you, Forex.Today. All right, so we're going to start with a recovery in oil prices. That's where we are. That's where we left it off. So another rally. How lucky are we? We should be thankful. So we had the double bottom, the higher high, higher low. We call that a 1, 2, 3. We're on our way. Now, pure technicians would say this is going to go to, what was it, 48, 50, 48 and a half, 49, 40, 48. It could. I'm not suggesting it will. That's just what a technician would say. I'm not saying it won't. But one thing that I can say is that we are pretty close to resistance again. Now, if you are a bull on oil fundamentally, this is a pattern that should produce a higher high. And then the monthlies are up here. One second. Okay. So it just comes down to what you think the future is going to be like. Right? That comes down to your alpha. But buying in here would be pretty ridiculous. Okay. Again, you're supposed to buy low in an uptrend, not high in an uptrend, right? So like where were you back here, right? So anyways, that's pretty nice, but that shows some sort of normalization in the market. It's if you look at the S&P 500, we've decoupled. Remember how oil would go up or down and therefore the stock market would go up and down? Well, it doesn't do that anymore. Cool. Okay. But the real question here is whether we actually printed the low. And this is important, not necessarily only because of price. Didn't really matter whether it's $30 or $20. Doesn't really matter. The thing is, it's a mental thing. If you believe you've printed the low, and you know what the low is, you can build your models and your budgets. Okay, based on that. So you would do things like, what are your capital expenditures going to be for the rest of 2016? And you're like, well, that depends. If oil keeps falling, right? But if you say, no, well, based on the $26 low, okay, right? What are your capital expenditures going to be? Oh, well, based on the $26 low, we will do A, B, and C. And we will spend money, 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 right? And now you have yourself a budget. But what if you're in free fall? How do you do this budgeting stuff if you're a business or, how do you do it? Well, you can't. But now this is nice. You could say, well, we've probably printed the floor. Global macroeconomics look pretty good, right? Things look pretty bad in January, but it doesn't feel so bad now. On the whole, it feels quite good. All right, so anyways. Did I just kill that chart? No. No, I must have. Okay, good. Okay, giddy up gold. Giddy up, boom, 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 bow, bow. Okay. So we got ourselves potential head and shoulders zone. If you're a bear. The 4 hour says, yeah, we're pretty overbought. It was a nice move. Doesn't mean we can't get to MR1. Okay. And we just hit the overbought area on gold on the daily, but certainly still bullish, not bearish. Okay. So there's no reason why I couldn't go to, this area if the head and shoulders doesn't hold. So it's more like if the head and shoulders hold, right? So we make a move, we've just made a move like this, then you would play it this way, wouldn't you? Right? Wouldn't that be the pattern? Yeah, that's right, Miles, right? Funny, huh? Beep. Right? Wouldn't that be the range that we'd be playing now? So we don't know. We're at the exact top of the right shoulder if it's going to be a head and shoulders. So that's a hypothesis, isn't it? So you say, if the head and shoulders holds, then I will behave in a certain way, ideally on a smaller time frame. So you could just be eyeballing a rollover on a smaller time frame. And you'd be paying attention to neckline, right? Because the neckline break is going to be how far you break out. So do you sell here? No, 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 no. But do you want to use the weekly pivot points as maybe the top of the right shoulder? I look at the 4 hour, it gives me permission. Go to the 1 hour, and it's just that fast. So what if you start to see the rest of the New York do this? At what point do you get in on the clue train, right? So that is a bear. Now, Miles says that's a plan for the bear, right? But what about the bull? Well, let me ask you, are you a smart bull or a gullible if you buy at resistance? Do you buy up here? Does a smart bull buy way up here on the right shoulder of a head and shoulders setup at the weekly R2? No, I think you wouldn't be a smart bull. You'd be a gullible. Right? Probably more likely a pig than a bull. So, anyways, that's that. Now you can see someone has been playing the hourly 21. So there are bulls here, right? Somebody bought here, somebody bought here, somebody bought here, and somebody bought here. Okay, the question is this going to end up being divergence? I like the way you trade. Okay, so what about the 15? What does the 15 minute say? Says to me, if it rolls over, it's going to do it soon. Be interesting if you can start playing it this way. So that's giddy gold. Whatever. All I know is if I'm a bull, I can't buy it here, so it don't matter none. Right? And we're still on our support for the S&P 500. Oh, is that our head and shoulders here? Yeah, we must have did this yesterday. No, that's last week. I'm sorry. I got all excited. I do remember drawing this. I just don't remember the context. But it's clearly a head and shoulders pattern, right? And you can see I have it projected. It's probably one of those things where it's set up to happen, but I don't want it to happen. But whatever, right? Oh, milli miles on gold. You want to see the divergence? Okay. If this stops going up, doesn't have to come down. Let's just say stops going up. The oscillator will recognize that we are not making higher highs relative to the previous candles. Will become overbought. Okay? Right? But if they start making lower lows, this comes down to knowing the math, right? If it comes up and then starts to come down, so not just consolidates but reverses, this thing will go wah. And you'll have top here, lower high here. Divergence. Okay. Beep, beep. So the divergence isn't there. You just got to be ready for it. Okay, you notice how it even popped up just now? We're still not making highs. So that's going to pull that sucker up. Hallelujah. Okay, euro yen. Okay, euro yen. This is an interesting space. Monthly pivot acting as resistance. 15-minute chart says up for 2 hours and then down. But we need some other kind of resistance if it's going to be resistance. By the way, if you're a bull, you have to have bought in, I don't know, half an hour ago, right? If you're a bull, you have to have already been on it. So there's the bottom here, there's a bottom here. The higher high predicts the higher low. It's not a problem. Okay. So again, if you haven't bought this thing in the last half an hour, you're just not looking, or you're not a bull. Fine. Bears are going to look for the other way, and they're going to fib it down. So maybe that's why you didn't buy it. You think it's coming back down, and we'll have the continued yen strength risk off mode. I'm okay with that too, as long as you can declare it, right? Now, what would create that? Okay, we need more than that monthly pivot, right? And you go to the 4 hour and you say, oh, snap! No, right? And a bear is required by law to sell it at the 21. Okay, just required by law. If you didn't sell it there, you're not a bear. It's sort of like if you're a bull and you didn't buy the 15-minute cycle, I don't know what you're doing. What is it that you're doing? I just don't know. I don't understand. All right. So what happens though is now someone bought it on the 5 EMA and someone sold it on the 21. And this is a battle zone. Okay? And if you do something in between these two areas, you're going to suffer a horrible existence. Because the bulls and bears are battling it out and you're standing in the way. Okay? So that's why like you need to decide what you're going to do and do it. If you're going to buy it, buy it. If you're going to sell it, sell it. Just buy low or sell high. Stuff in the middle is just amateur hour, right? Yeah, well, it's the same thing. Miles says a fib war going on. Well, it's the same thing. Yeah. Bears are selling, bulls are buying. Why are you in the middle, right? How could you possibly make money in the middle? So there's that. It's pretty interesting, eh? Euro. Euro. Okay. The market is still bullish on this on the daily. Kind of feels like a mean reversion at least. Could be a reversal, but we're not saying that yet. Too early for the R word. But at some point, it wants to wait for the 21 to catch up. So the bare minimum is a move like this, right? You notice, however, it's really moving sideways. So this could just move sideways till the 21 catches up. Okay? And this will go, Okay? I'd like it to actually come down, but that doesn't have to happen now. Again, if you're a bull, you would have bought it at 114. If you didn't, I don't get it. I just don't understand. It's oversold at a psych level, okay, with a roll reversal. I guess it's even up there. Maybe you're thinking 113 more than 114. That's cool. But if you're day trading, you're going to have to play these things, right? You're a day trader. What do I teach you to do? If you're a bull, find the nearest two levels in which you may consider buying. Okay? A psych level near a pivot cluster. This is a psych level of 1.14. Okay? And ideally when it's oversold. All right, so look. All right, you bought this if you're a bull and you're day trading. Okay? You would have cycled down like this. Okay? Now you're vulnerable, right? That's fine. That's why they invented stop losses. Okay? Yeah, euro pound, sure. Yeah, if you're bullish on the pound and bearish on the euro, yeah, why wouldn't you, right? Okay? Makes sense to me. Okay, if you're a bear and you're aggressive, you could be selling these 5-minute cycles. You have to be pretty aggressive, meaning, ideally you have more going on than just that. But you can see how of a basic pullback this is. And if you're going to sell it, you got to sell it before you get to the psych level and to the pivot cluster, right? Traditionally, though, if I were me, okay, and you're going to trade this way, the bear one is doable. You got to jam your stop. The timing was pretty good. But the way I prefer to sell is you got to break the psych level first, then pull back to the psych level, right? And then what? Your sell zone, oops, come on, drawing tool. Sell zone's in here because it catches the psych level and the pivot cluster. And what? Where are the vast majority of stops? Between here and 20. And 20 is about this level. So if I can keep my stop above that, the general idea is break, retrace, continue. Does that make sense? Okay. So selling it up here is okay. And like I said, you got to be aggressive because you're planning on the break. I don't always do it that way. Okay. Yeah. Especially with the oscillator like this, no, I probably would have ignored it. So like I said, my tendency is if I spot this reversing here, I'm taking the shot. Okay? And I might even, if I had taken the shot, I could be breaking even right here. Oh well. Okay? But usually what you do is you buy as close to the psych level as possible. Okay, so the 114 is there. The pivot cluster is a little bit lower. Okay? Where's my stop supposed to be if I'm buying at 0, 0? Just below 80. Okay, because I'm assuming 0, 0 to 80 is where all the stops are clustered. Okay. If it breaks 80, whoop, it's going to go straight down to 50. or the nearest pivot, that kind of thing. So, you don't want to be hanging around. You won't find me sitting at 75 or 70 hoping it goes back up in this case. No hope, guys. It's dead. It's going down to 50. You see what I mean? There's no hope. You're on the wrong side. You got to take the loss. You have to have the discipline to retreat. Right? You know the blood on the street analogy? Well, it shouldn't be your blood. Okay? So again, if you're a bull, you could be interested in this. 15-minute gives you permission. 5 minutes is you're out of position, but we'll find out, right? You could drop into this, buy it, and look, I mean, you're risking 20 pips if you're a bull, okay? You have to preface all of that, if you're a bull. Now, the dollar index is on a pivot point. I believe it's either a weekly or a monthly. Let me tell you. Weekly S3. Hallelujah. So maybe dollar strength, and that would pull this sucker down. But maybe you don't have that, and it's not part of your alpha. That's fine. Again, I don't care whether you're right or wrong. If you buy at support with the 15-minute trying to go up, 1 minute and 5 minute maybe giving you whatever your entry, if that's truly what you got going on, I'm okay with that. I'm never going to yell at you for buying at support. Okay? So let's move this to, I don't know, hourly, 15. Hourly is quite neutral, 4 hours neutral, daily is overbought, wants to come down. Okay. But I have the general tendency of, I'm going to line up this 1 minute and 5 minute chart in the direction of the 15. I'm going to use support to my advantage and the psych level. I could be wrong, but how wrong am I going to be on this? 20 pips? 25, right? Would have to be worst case scenario. So what's the reasonable potential if I'm right? And this sucker does go up. Here? Does that seem about right? So I'm risking 25 to make 50 or 60. We'll say 50. Is that reasonable? Notice we're at the pivot cluster monthly and weekly central. Okay? So, all right. So you're watching this 1 minute with delight and intent. Gregor says there are no sellers up there. Okay, that's cool. So then what you do is you buy and you hold, right? And you risk 25 and maybe you're expecting to make 200. That's okay. The entry is always going to be the same. Who cares, right? So to me, it's much more important that you simply make a decision. Right? You can't expect to be right all the time. Yeah, Miles, I generally am out by the time, 75 is okay. Okay, but realize that if you're at 75, there's no hope. Okay? And don't get in this game where you say, oh, well, at 70, there's a pivot point. And then, oh, just below that, there's something else. There's, all of a sudden, you're hanging on, talking yourself into reasons why you should hold it. Take the damn loss. Okay, some of you guys have bought my book recently. What do I say? I say, take pride in your losses. How many other trading books say things like that? I actually I don't have any other trading books. I don't think very many, I would guess. Take pride in your losses because those are the ones where you had to make serious decisions. The winners should be easy, right? You bought it, it went up. What's the big deal? You bought it because you thought it would go up. It did go up. What do you need, a slap on the back for that? Right? You bought it at support in an uptrend. Whoa, good job, dude. You so smart, right? No, who cares about that? But having the patience and to wait, and then the discipline to get out of a losing trade simply because your trade plan is not working out, that's a difficult thing to do. And also, you have an opportunity to learn from your losers. Your winners, you have nothing to learn from. What are you going to learn from a winner? Right? So if you're like celebrating, woo, well, okay, you made some money, but that was the whole point, right? The losers are, you're like, okay, what went wrong? I did my analysis. I was certain I was going to make money, and it didn't work out. Okay. So, for example, if you're just throwing down trades here because it looks like a good trade, well, then you're lacking things like the discipline to create trade plans and bias. What's your bias for this? Why would the euro dollar go up? Right? Oh, I just threw down a trade. This one didn't work, so I'm going to throw down a trade somewhere else. Ooh, that's a slippery slope. That's a dangerous game to play, isn't it? But if you're like, I'm a bull, and we're at support at a psych level in a cluster, look, that's where you take a shot. If you're not a bull, then you don't. But, your losers are the ones where you can go in and learn from. So, for example, okay, if you just bought this now, and it goes like this, it should knock you out. Okay? You should be out and say, well, that's not what I planned on happening. And then you can say, well, what could I have done better on this trade? And you could say, well, I could have at least waited for a 5-minute stochastic cycle. Remember, the stochastics is sped up. And you're like, you didn't even have the patience to wait for a 5-minute stochastic cycle? But if you could, the 1 minute wanted to go up, the 15-minute wanted to go up, and now you got the 5-minute, you got 3 time frames wanting to go up. Okay, well then that's cool. And maybe on the long run, that'll save you from some losing trades. Now, most people don't wait because they think they're going to give up pips. But what they don't see over the course of 1,000 trades is that, they're actually going to make less pips by trying to make more pips now. And the reason for that is you're not calculating all the losers that you're going to get yourself into because you were overly aggressive and couldn't wait for the cycle. But if you can stay out of half of the losers by waiting for a reasonable trigger, then the drawdowns don't draw down your average. And so your actual average is much higher because maybe only 20% of the time it actually comes down, right? So 80% of the time you're right versus only 60% of the time you're right. All right, well, whose volume is it, Gregor? See, Greg says volume. Why don't I use volume? Well, volume is great if you're on an exchange. Okay, because you know the total volume across the exchange. Forex isn't really like that. Okay. Yeah. Yeah, in buying stocks and buying futures contracts, yeah, that's quite important. Okay, well, that's fine. Just make sure, Greg, okay, so it works for Greg. Greg's using it right. That's fine. My only challenge to it is do your research because I don't know. It's just, okay, I don't know, okay, but what volume is it? Where's the data coming from? Is this TradersWay volume? Is this from our clearing partners? Or is it an algorithm that, is trying to figure out volume? Just how is it calculated? Okay, but how do you get it? Yeah, okay, Peter says real volume. What does that mean? From the clearing partners or from the broker or an algorithm to try to capture volume? Okay. It does get complicated, but it's not supposed to be complicated though, right, Eric? That's what I'm saying. Just make sure you know what you're using. A lot of people use the tools and they don't understand what they're actually showing you. So you believe it might be volume, but it may not be volume. One of the things that I use almost as a volume is the oscillator, right? So if price was going up and the oscillator's coming down, there's very little volume. And then you get a new move this way, volume likely picks up. All right. Yeah, so normally in MT4 it just counts ticks. So how many ticks within each? So the volume could just be tick data doing this over the course of 1 minute, and then an hour later over the course of 1 minute there's only this. And they'll say this is lower volume than that. If that's true, then that might not be what you assumed. So Greg, I'm not saying anything bad about it. I'm just saying make sure you know what it is. Okay? I don't know what it is. Yeah, on MT4. Because I know with stock indices, or well, I guess those are futures, right? Futures and equities, hugely important, right? Okay. Yeah, hugely important. Then you switch over and go to Forex on MT4, and it may not be the same. So that's all. Just be careful, right? Got nothing but love for you, babe. Just be careful. Okay. Well, it's cutting through that psych level. This is the moment of truth, right? You want to see trading history on this account? How far back do you want to go? A week? Well, that's getting pretty personal, Richard. I don't need to pip and tell. Let's see. So this is a play account. So I think this is just this week. Is that right? So 56 trades, 82% are winners, 17.86% are losers. Usually when I trade, I get 6 consecutive wins and then I get a loss. So 6 out of 7 in a row is my typical. So, but I think that's just this week. So let me change this. That's not what I meant. Custom period. Let's do last Monday to today. You know, they're just pissy little trades, but this is just a play account. Come on, mouse. All right. Oh, so it's cut through. So going back to last week now, last week till today, 254 trades, 81% winners, 18.19% losers. It's not as good. I usually get 6 consecutive wins and then 2 losses. So it's not quite as good, so only 81% winners. And there's my equity curve in the last 10 trading days. So out of 256 trades, 206 were winners. Is that okay? No, it's not a demo. So is that okay, Richard? Do I still have your respect? Cool. Right on. Wayne, do you look at candlesticks? Sure. Sure. Nothing wrong with the candlestick, right? Yeah, I'm looking around. Yen is trying to gain some strength again. USD yen is not doing anything. USD yen is stuck on the 4-hour 21, which could be a sell zone for some. Richard, you could consider a mentorship, but I am probably shutting that down. I just don't have the time. But I'm getting down to my last few mentorships. What was I going to do now? Oh, yeah, trade the news. We got news coming out, I think. Don't we have something? I know it wouldn't be much. Yeah, Ron says thanks for the transparency. Yeah, not a problem. I don't like doing it though very often because inevitably people try to copy or other people judge and like I don't know. It's like one of these things like if you watch the Masters golf tournament this weekend on Tuesdays and Wednesdays, they're out there on the practicing range, the top 25 golfers in the world with their coaches. The top 25 golfers in the world, the number 1 golfer in the world out there with his coach, working hard. Nobody says like, hey, a-hole, why don't you go out and beat me at golf and then maybe I'll hire you as a coach. Bad bad US news. Okay, bad import data. But anyways, like out of the coaches that coach the best golfers in the world, were these coaches ever the best golfer in the world? No. Who coaches Tiger Woods in his prime? Who coaches Michael Jordan in basketball in his prime? A better basketball player? No. You don't need the world's best. Do I practice? No, no, Greg, no. um, so what you need is a really good coach, preferably one that knows how to trade. But you don't have to be the world's greatest trader. But I've seen worse traders than me. Okay, so I'm just looking around here. Some of the commodity currencies are trying to make their moves. Kiwi seems to be Oscar Mike. And did we miss? It's Tuesday, is it? Is it Tuesday? I think no, it's Wednesday. No, it's Tuesday. Did we miss a dairy auction? Kiwi's really hot right now. Did I miss the dairy auction? Is it Fontana week? No. Boy, Kiwi's just quite strong in just the last, I don't know, half an hour to 45 minutes, stronger than I thought. I thought it had a little bit of weakness on it, and now it knows so weak. It knows so weak. Yeah, a little bouncy here on the euro. Yeah, that's cool, right? Isn't this what we've been talking about? Remember, 15 wants to go north, right? 15-minute gives you permission. Now it's all about timing your entry. Cool. I don't see a lot of move on the dollar, even though it wasn't a good report. So Indian CPI inflation is really high. I was reading some government reports. It's funny how I have to do this, right? So yeah, I'm reading government reports. I only read 1,000 pages a week, guys. Nice, right? But I learned something new recently about how monsoons contribute to Indian inflation, and that India could easily have a food shortage because they don't have infrastructure. Apparently, they don't have any place to store their food. Amazing. A country of 1.3 billion people, they have nowhere to store their food. So, if there's a monsoon and there's a heavy rains destroy the crops, well, India is just out of food. No, no, seriously, 1 billion people out of food. Yeah, well, if we had it some stored as a backup plan, then they could just add more food into the market to replace the gap. No, apparently there's no storage in India. Welcome to India, right? So anyway, so if there's bad monsoons and it ruins a bunch of crops and there's a shortage in food, guess what happens to food prices? Pachow. Food prices go up. Isn't it amazing? So Modi, the Prime Minister of India, theoretically wants to start building infrastructure. It's just remarkable, though, isn't it, that you could have a country of over 1 billion people and have no basic infrastructure. It's just like, really? Holy smokes. Contrast that with China, has over 1 billion people, and something like 97% of Chinese households have access to electricity. Huh. 97 versus India, which I think is only 70. So look, I think, guys, India will win this race because their labor force will be more affordable for longer. And it is a democracy, good or bad, I suppose. But at some point, money needs to go into India and build its infrastructure. Buzz says there's no infrastructure in Egypt. Yeah, well, it's North Africa. What are you going to do, huh? Yeah, the MENA region um, has some major challenges, huh? Yeah, and what happens if oil and gas goes away? Then what, right? Egypt has pretty good supplies of nat gas. Yeah, lots of gas. And they sell it to Israel. It's like great. Good night, Effendi. So again, guys, I'm not going to be here tomorrow or the next day. I apologize for that. And I probably will be around Friday, probably be around Monday, probably maybe Tuesday, not sure. And then I got to get back to this planet. So, it's a long, right? But I'll do my best to be here for you, as you know, right? Yeah, that starts in June. Yeah, for the plane. Bring mask for the plane. You're so right. I'll be in Shenzhen. Oh, for the smog? No, the Ritz-Carlton doesn't have smog. Yeah, I'll be around for the Harvard program, but I have to do my first semester. I have to do, I think it's 16 weeks worth of work in 3 weeks. Yeah, they do have a nice cigar bar, Cream. So that's going to be hell. And then in September, it's double the work, but I have the full 16 weeks. So I got to basically do 2 classes. But from what I can tell, less than 1% got accepted. 99 out of 100. And I don't think idiots applied. So the more I think about it, it's like, holy crap, what luck? I was telling my neighbor, I'm like, they must have made a mistake. Right? They must have screwed up. They mixed their papers up or something. Wow, right? I'm like, man, Harvard's desperate. But anyways, no, it seems to be quite an honor. Now I just have to get through 4 years of hellish grad work. And I've already been there a year and a half, but not in a program, right? So now I'm in a program, an elite program. Oh my gosh. And like I said, the current class I'm in now is stupid. There's so much work, it's stupid. You're like, how could you possibly do this as an executive? No joke. It's just like read 1,000 pages a week. And that's not even including our 2 textbooks. And every week I have to write a paper. You're like, that's just stupid. Right? So anyways. So I learn what I possibly can, and I share it with you. It's my form of giving back, guys. I do understand how tough this gig is, how tough it is to be a trader, how tough it is to get past the failure part and just get to break even is such a journey. And then when you get there, to turn it into profit is a whole nother journey. You know, instead of three months up, 3 months down, 3 weeks up, 3 weeks down. And then what you don't even know, once you get past that, learning how to bring in money and find investors and speak to investors and answer their questions and give them the information they need to make an informed decision. All of that is a whole new language, a whole new school of thought, a whole new world. And you're like, damn, I worked for 7 years to get good as a trader. And now you have to enter a different world to show people that you're a good trader. You know, it's like it's a different thing. You're like, okay, well, you got that taken care of. Now you know nothing. So I'm here to share as much as I possibly can. But my time is limited, and it's going to become even more limited. So I might be able to mentor some over the summer. I have some gigs in the summer that are going to happen, and then maybe those last ones are already taken. But even if I do mini mentorships, maybe 2 weeks instead of 4 weeks, if you need one-on-one time, you better ask. And I don't know if I can say yes, but I don't know. Ask if you need, and I'll see what I can do. But I don't know. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers. And sorry again for tomorrow. They changed my flight, so